OpenAI has reportedly committed to deploying at least 10 gigawatts of compute infrastructure. This is through NVIDIA, and they've got another $100 billion investment from NVIDIA. At the same time, you've got all these estimates that say, somewhere around $1 trillion by 2030 is what OpenAI has committed in just infrastructure promises. How do you assess the risk of this massive build out? And is there a prudent long-term strategic bet, or is this bordering on speculative overextension? Are the numbers getting crazy to you, Dylan?
I mean, all those numbers are mighty large. And so it's sort of easy to, at the very least, as a paternal, your paternal instincts kick in and you want to make sure we're not just spending money for nothing over here, But I think how do I answer this question? One, it's impossible to know. No one knows the answer to that question. Yes, the numbers are enormous. However, if you think about basically the underlying principle here, which is that the entire internet is being replaced. Like the entire back end of every screen in the world. I mean, Bezos, I think, said it best in the past year, where AI is not a tool, it's not an app, it's not a location on the internet. It is a new layer that pervades all communications interfaces and all communications interfaces and all screens the same way that electricity does. So the metaphor for AI is not, oh, this is a new app or this is a new, use case for something. It's that this is a new layer across every screen in the world, no different than the fact that electricity is a layer across everything in the world. And because of the fact that it is this layer, it's certainly, I wouldn't be too quick to suggest that those numbers are automatically out of hand.
Does it spook you that it's coming from OpenAI, which, isn't even a public company yet, and not from something like an Apple or a Google or, Amazon?
I know in the sense that does OpenAI have credibility, or why are they doing, meaning are the numbers real, you're saying?
Yeah, do they have that credibility? Are the numbers real? And are they going to be the one that's putting the $1 trillion out there, or is it going to be somebody else and some other group of players?
Is it going to be Big Daddy instead of AI?
When is Big Daddy going to say, oh, we're doing $1 trillion as well, and now you got $5 trillion on the table 5 years out in time?
I mean, that's a great question, but at this point, I would not discount OpenAI just because they have what amounts to first mover advantage. They have the most widely adopted consumer product. Personally, I do think that Google's Gemini is probably better positioned in terms of monetizing things and whatever, but Gemini's nowhere on the consumer side. You would think that Grok and the Musk routine would have some action because it's embedded in Twitter and all those other things. But again, relative to GPT, it's nothing. And so I have no reason to discount OpenAI any more than you would discount Google and coming in to replace Netscape and InfoSeek and all the original search companies. I mean, OpenAI is the industry leader right now, and it has the first mover advantage. And I think you'd be a fool to discount them.
Do you think...
I agree. You might be a fool to discount, but it does seem like it's priced to fail, right? I mean, it almost has to be a home run for this to come to fruition.
Yeah, for sure, that's true.
Yeah.
I mean, you think OpenAI, by the time this all gets settled, let's say the 5-year time frame, you think OpenAI is one of, if not the, biggest company in the world? Is it that big? Is it gonna over,
it has the potential to be that. I don't know whether it will be or not, but I think it's sort of like, if you were to pick a list of 10 companies that will be the largest company on earth 5 years from now, OpenAI would be one of those 10 companies, along with sort of the usual suspects: Meta, Amazon, Apple, Microsoft, Tesla. I mean, but OpenAI is right there. And it's sort of, and they just have every incentive to both overinflate the more big numbers. They want to spook everybody. I mean, they just have so many incentives to inflate numbers and also to spend wildly because they have the financing to do it.
I like it.
Makes sense. Next question, please.
Yeah, let's do the next one here. It's funny that the YouTube chat is asking how many supernovas we're going to get, and I put one in this question as well. So I'm interested to see your take on this. So we keep hearing that markets are frothy. You've got all these meme stocks going nuts, Beyond Meat, stuff like that. You've got the nuclear and the rare earths and the quantum stocks. I don't know if you saw this, but Polymarket is launching 15-minute up or down crypto markets. So you can just bet on if Bitcoin's going to be up in the next 15 minutes or down in the next 15 minutes. You've got DraftKings, getting into prediction markets. From your perspective, what specific indicators would you use today to determine whether the current rally is simply just, strong growth and a booming economy, or has it crossed into froth? And does right now, feel like past market tops that you've been a part of? And do you still feel like the supernova is going to continue through the end of this year?
I mean, for sure it's frothy. I mean, for sure it's not just in my opinion, it's not just some sort of rational discounted cash flow of future earnings potential at this point. Like, it's into speculative madness, obviously, maybe not without some basis, going back to the AI conversation and all this and that, but for sure we're into froth. But just because you're in froth, I mean, this is Alan Greenspan's favorite and most famous quote in terms of staying irrational longer than people can stay liquid and all this. So I have no reason to think it's going to stop. I mean, the only reason that you would think that anything's going to stop is because obviously there's a risk of a catastrophic sell-off, and the risk of a catastrophic sell-off is always higher when you're at price extremes to the upside, as we recently saw with gold in just the past couple of days. And for sure, there'll be a day sometime in the next few months, or certainly in the next 6 to 9 months, where the NASDAQ and the S&P are going to get face pounded, and it's going to be an abomination. But does that mean you're going to sit around for the next 5 or 6 months waiting for that day? I don't think so. I mean,
do we do it at 67.50 where we are right now, or do we do it 77.50 where I think
it's more like I think 77 is more likely than 67.
Right.
I don't see any sort of obvious evidence of cracks in the armor.
So are you calling irrational exuberance, or are you saying that's what the
I'm using the hear me out phrasing, and I'm going to call it frothy. But again, a little froth is kind of nice. If you enjoy a good hot chocolate, you want to have a little froth there. It's okay.
I just think that, I'm going to point to volatility again. Volatility can't get out of its own way. And if volatility can't get out of its own way, you can think we're frothy or not. It seems like, the market itself has had smooth sailing. We've had 1% moves lower that are bid up. I mean, you're not even getting 3 and 5 and 7% moves. Forget about 10%. You're getting 1 and 2% moves that get bought. Now, under the surface, you have some stocks. We mentioned BE, OKLO, that go up, 200% and go down, 30, 40%. So you do have those speculative stocks that I think are frothy. I think that's where there's some froth, but the market itself seems to just be backfilling pretty nicely. I mean,
I agree.
Dylan, do you think it's ever going to be a gradual sell-off, or is it just all at once? Like, we talk about how the market just seems to just grind up every single day, and we haven't had any really sustained sideways / down market. You think those are just no longer applicable?
I mean, certainly not at this moment. I think I would just think about how long does it take to build a new house?
Yeah.
And how long does it take to burn down a house? I mean, the dynamic of this market is it grinds higher, and then whether it's an index or an individual security, occasionally something gets blowtorched. But I think the blowtorch is much more likely than the downward grind.
Yeah, I think they go up the same way I think they go down the same way they go up. I agree with you, Dylan. I just don't know if they go the magnitude of the move to the downside, the magnitude of the move to the upside.
Mm-hmm.
I don't know. We'll see. I think the last question, right, son?
Yeah, let's get to the last one here. So this is kind of wrapped around the recent China tariff kerfuffle that we have going on. So with the U.S. announcing plans to impose tariffs of up to 155% on Chinese goods beginning in November, despite a stated preference for amicable relations, how do you interpret the signal this sends to the market and trading partners? And is this another taco? And if so, when? If it's not, does it matter to markets? Do tariffs matter at this point? And when and if are we getting a taco?
I mean, one, for sure, tariffs matter. For sure, he's not going to do this. And for sure, he'll wait to not do this to the last possible moment because he loves a good cliffhanger and he's a hell of a TV producer. So he will back off of this. He won't back off of this until 23 seconds before the car goes over the cliff, or even 1 second before the car goes over the cliff. And yeah, they do matter. So I mean, that you saw what happened when this first popped off in the market for that one day, and you also saw how quickly rhetorically he backed his way out of it.
Yeah, there's so many variables with this tariffs. I mean, I know it can protect domestic industries and stuff like that, but it really comes down to, I think, like the numbers he throws out there sometimes, and by he, we're talking about Trump and the administration, 150%. You might as well be saying 1,000%, right? I mean, you're
a million, billion, jillion, million, billion.
You're pricing yourself out of the market, right? I mean, the tariffs all depend on how much economic impact they're going to have on, but that comes down to what, the scale of the tariffs. When you say 150%, it's almost like saying, it's almost like when I would threaten Nick when he was a kid and say, that's it, I'm going to take your bicycle away. And it was the only form of transportation, which meant I had to drive him everywhere. It didn't do me any good.
He's like, good luck with that, pal. Good luck with that.
It didn't do me any good to take his bicycle away. It would be like, all right, you got to come home at, 6 o'clock instead of 8 o'clock. All right, then, he gets to and from by himself and, it doesn't inconvenience me. But to say I take your bicycle away and now I have to drive him everywhere, it's almost like biting your nose off to spite your face. It seems so unreasonable.
It's a theatrical negotiating position with China that may well be working. It's sort of like, I think that, his hyperbolic threats are negotiating techniques. And because he's the president of the United States and because that's the most powerful country in the world, those threats have to be taken seriously, no matter how hyperbolic they are.
Sure. Yeah. And I think that's what it comes from. You're on top of the hill kind of thing, looking down. Yeah.
Good stuff.
Well, so far it hasn't affected any of the markets, right? I mean, commodity prices obviously higher. I mean, by markets, I don't mean like food prices and stuff like that. I mean, the financial markets have been pretty steady with all of this, kind of discounting any of these hyperbolic numbers that you used.